So Tina, we've looked at where you can invest your money. Now what I want to do is show you how I manage tax planning for my clients. So when we look at tax planning, there's a couple things that we're looking to ensure we do. It's, first of all, reduce tax at source, whether it's your employment income, you're a professional, so you're being taxed fairly heavily, but also on your investments to reduce that taxation on investment income. And then it's how to maximize the after-tax and in fact take advantage of before-tax income wherever possible. So when we look at tax planning, what we're going to do is look at 5 different categories of planning and see what's available to you, because within those 5 categories we have about 40 different strategies. Now you're never going to be able to use all 40, but if we could get 6, 7, 8, 9 strategies to put towards your goals, that's money in your hand versus the government, right?
Exactly.
So the first one is what we call income deferral, and that means whenever we can defer income, we defer taxes, therefore your compounding rates of return without being taxed. When we look at income deferral, basic ones, you've already said you do RRSPs, right? You've got a non-registered portfolio. Have you ever triggered capital gains before?
No.
Okay, so the more we can defer that gain, the better the compounding is before tax. So that's one of those RRSPs, pension plans, all kinds of deferrals. The next one is income splitting. You mentioned the children, and you've done RESPs, is that right?
Correct.
So the RESPs are great. They're both an income deferral and an income splitting. But in fact, income splitting has more strategies than any of the other 4 categories. So we can look at a lot of those to see how we can get income moved from you to the kids and therefore taxed at either no or lower tax. The third category is income spreading. And what this means is we're looking to spread income evenly out over multiple years so that you don't have any anomalies, bumps of income that jettison you into higher tax rates. You haven't triggered any capital gains, but when you do, it might be we don't want to change the whole portfolio at once. We want to do it piecemeal over a few years and trigger those gains. When it comes to retirement time, we're going to spread out your RRSPs, which turn into RIFs, Registered Retirement Income Funds. We spread that. Have you ever had a severance package from work? No. When, at some point in time, you would leave one firm because whatever, but they pay you out a severance package. We can actually spread that over multiple years. The problem is most people don't know about it and it doesn't happen. The next area is what we call tax sheltering. And this is a higher risk area of tax planning, and unfortunately it's got a bad reputation because a lot of these pre-packaged tax shelters really tend not to make the investor any money. It makes the promoters a lot of money. A couple professors out of York University actually suggest making your own tax shelter where you build the portfolio, you borrow to build it, and you get to deduct the carrying costs. Have you ever dealt in any tax shelters in any way?
No, I haven't.
Okay, that's something we might look at. As I say, it is a higher risk, so it's something that may work for you, it may not, but it's something we'll definitely take a look at. And finally, tax credit maximization. Right? We've got a multitude of tax credits that the government is constantly layering on. Basically, they're just buying votes through all these tax credits. But we've got to take advantage of every one of them that we can to reduce our taxes. So what we do is we tend to look at the tax credits that are available to you now, for yourself, for the kids, but then we also look into the future. So when you do retire, we want to make sure you get your pension tax credit. Even though you don't have a pension plan, we'll turn your RSP into a pseudo pension plan and get a tax credit, your age tax credit. So there's a lot of caregiver tax credits. There's a lot of credits that we're going to plan out for into the future. We're not going to use them now, but they're going to be there waiting for you if we've structured you appropriately. So as I said, about 40 different strategies. We're never going to get all of them to work for you, obviously. But if we work through all of these, we're going to be able to have more money in your pocket versus the government. How's that sound?
Sounds great.
Terrific.